1 second, guys. Last minute change, sorry. Okay. Welcome. Welcome to night 5. Can you guys hear me okay? And see my screen? Please let me know in BootCamp. Cool. Okay, so let's get started. The first thing we are starting with tonight is exhaustion risk. What is exhaustion? Exhaustion by price and exhaustion by time.
You forgot to share your screen.
Oh, that would help. Okay.
In a sec.
Okay, we should be good now. Sorry about that. I forgot to connect the screen. So we'll start over. Tonight we're doing exhaustion risk. What is exhaustion risk? Exhaustion by price, exhaustion by time. So exhaustion. It can occur in 2 ways: by price, when a trade becomes crowded, and by time, when new continuity levels open up. We're going to get into the details down here. Exhaustion risk is when you are at risk of being in a crowded position. This occurs when you are at all-time highs or all-time lows. This also occurs on shorter time frames when you go into recent highs or recent lows, and we call this short-term exhaustion risk. When you go into new highs, anyone who is short now has nothing to be short against and are stopped out, and thus the buyers must step up. If they don't, price will not continue, and vice versa at the lows. Here's an example of exhaustion by price. When price makes a new low or a new high, it is at exhaustion risk. So you'll see if we're starting the chart from left to right, like how we read, we have a 2 up that triggers the 2 down, and exhaustion risk occurs once we make a new low. So that puts us at immediate short-term exhaustion risk because we have taken out the mother bar and completed the compound outside bar. So that puts us at downside exhaustion. Then they reverse, take it up, and take out the highs. So then this is upside exhaustion risk. And we expect reversals to happen here. So exhaustion by time. When the 122 Rev Strat has closed trading, it is exhausted by time. So here is the inside bar, 2 down, 2 up. It ran out of time and it did not hit its target. So when candles close, that's the end of that trigger. So we'll get into that a little bit right here. But time exhaustion is why we prefer longer time frame signals, because daily signals only last for 1 day. Once they're done, they either hit magnitude or they don't, but the signal after the close of the day is gone. Monthly signals last 30 days, week 5 days. So we run out of time once the signal expires. Okay, now we're going to talk about broadening formations. Here's the contents. I feel like I don't need to read all those to you. We're going to go through them. So the outside bar. We touched on the outside bar previously in the I think it was the first class, about the strat scenarios, the 1s, the 2s, and the 3s. Given that outside bars occur, we know the broadening formation is the only relevant pattern to price action. We commonly call these a triangle, a tri, or a broadening formation. This 3 is proof of the third universal truth of the price discovery broadening formation. So what is a broadening formation? A broadening formation has only two characteristics. It has lower lows, which you can see down here by the downward sloping visualization line, which we're going to get into that later. We don't want you trading the lines. We want you to see that there's lower lows, and it has higher highs. Let's see. So this price action is broadening and getting bigger. And broadening formations occur because of short-term exhaustion. So once we make a new low, we don't know, and then we reverse, go back up. Once we make a new high, we don't know if they're going to continue. You'll see a reversal, go back down, the cycle repeats. So I guess we have lots of, we really do have lots of words for a broadening formation. Triangle, compound three, or broadening formation. And we already did cover what a compound three is. It's just two bars that become an outside bar of the previous bars. It just takes a little longer. What?
2 or more bars.
Oh, 2 or more bars. Yeah.
I believe.
Looks like we're missing an image, maybe.
Yeah, I apologize about that. I'll send you the image.
Okay. So I'm gonna talk about this while he's sending me the image. So, oh, maybe I'm not. No, we can. So the image that he's gonna send me is for you to notice that we have higher highs and lower lows. So the defining characteristics of our broadening formation. And traditional technical analysis is taught to short support, so short the lows, and go long on the breaks of new highs. We literally do the exact opposite of that. We are taking profit on our short position at the lows, and we are taking profit on our long positions at the highs. Here we go. Let's see. Oh, it's mine. So here, let me see if I can make that a little bit bigger. So here is how exhaustion reversals and exhaustion works and broadening formations work. You can see, looking at the left side of the chart here, we have an original high and we have an original low, or a swing high and a swing low. Okay, price travels up, making a new high to this high. So we would be looking for longs all the way up in here. And once we hit our target, the high, then we don't know. That's where we teach you guys to take your profits. Then you'll see you get a 2 up, 2 down reversal right here. And where are we trying to go? We're trying to go to the other side of the range. And you'll see that we very clearly do. We make a new low. So we would be short from here to here. Then we don't know. We're at downside short-term exhaustion. So then we look for reversals back up. You have a 2 down, 2 up reversal. Where are we trying to go? We're trying to go and make a new high again. So again, we're long from this candle, targeting a new high. Same thing here. We make the new high to this high. We get an inside bar. So a 2, 1, 2 down. Where are we going? We're trying to go to the new lows again. So you can see this little white line. You have a low, a high, a new low, a new high, and then they're trying to make a new low. So this is how we do the opposite of what breakout traders are taught to do, because once a new high is made here, breakout traders are going long. And again, we are selling them our positions. Like, we're already in from here, so they're going to get wrecked. They just don't know it yet. And then same thing with the shorts. They're taught to short fresh lows. Well, no, they're taking our winning positions and they're going to be losers immediately because we're going back the other way. So that is how. I don't know how to get this off my screen. There we go. And I teach a method I call the finger doodle method because I want your eyes to be drawn to obvious pivot highs and pivot lows. So we want you to practice trying to find price action that has higher highs and lower lows, and then practice drawing them with your fingers or with a a polygon tool, like something with 5 lines or more. Just something that you can squiggle on so you can recognize when you have higher highs and higher lows. So for instance, here, that's a pivot high because the 2 candles next to it are lower, so that makes it a pivot high. This is a pivot low because the 2 candles next to it are higher, so that's a pivot low. So you have a high, a low, a new high, a new low, new high, new low, new high. So that is your ideal broadening formation. And we don't want people getting so hung up on the trend lines because people then start to think, oh, well, price is supposed to go and hit the trend line. Well, no, it's not. The trend line is a fake target. We are targeting actual levels. Breakout traders. This is why we are a breakout trader's worst nightmare. They are our exit liquidity for our winning positions. And we pretty much usually put them in losing positions right away, which I talked about a little bit ago. So again, when they're longing the highs, we are selling them our already long position from a much lower entry. When they are shorting the lows, we are letting them buy our already short position, winning position, from a much higher entry. And this is where I give you guys to Alex. So Alex, are you all ready? And I will stop the stream. All right, I'm going to stop.
All right. If anyone gets kicked out or anything, make sure to revisit. All right. So let me get it on Discord. Once you end that Discord stream, we'll get started. I'll give everyone just a little bit of time to get in the Discord stream. So the broadening formation, you've already had the introduction by Sarah, and you should know by now, the 3, the try, the broadening formation, the BF, all of those things are the same thing, which is why this pattern is so relevant to price action. What we're going to talk about is how this is combined and how we draw and identify these tries objectively. So hopefully everyone is in on the Discord. Let's get started. So here's your contents, drawing the try, timing the signals with the broadening formations. We can also use levels of reclaim to identify the 3rd universal truth of the broadening formation. And then continuity, how that interplays with the try. And then the internal try, or when you get stuck in a previous range, and then expansion. So the first thing is drawing the try. The try or broadening formation is drawn from right to left to include as much information as possible because we do not want to be subjective in our analysis. And this broadening formation is just a visual depiction of what we know to be true at any point in time. So it's not drawn without understanding continuity. It's drawn with continuity. And what you're going to see is the broadening formation is subject to change when continuity changes or when new highs or new lows are breached. So for example, we can identify the new broadening formation between these 2 charts after the lower low and change in continuity. So you'll notice this. Yep, we're doing that now. So when this chart is trading right now, what are we identifying the try as? Well, the bigger try, the bigger broadening formation here is going to be from this high, drawn back to include as much of the previous range as possible. So we draw it to here. is you'll notice all of these bars are then encapsulated here. And then from a new low to a previous low. So in this case, the only new low that was formed was in here. So you'll see this low here is higher than this. You'll see this low here higher than this. And currently this low is higher than that. So we have no other try. This is our try. And we draw it back to include as much information as possible to try and make that line as flat as we can. So you can see this was the last low taken out. If you're drawing to pivot lows, some people will draw it to this. That's also perfectly fine. When we're talking about this here, ideally as flat a lines as you possibly can get to include as much information as you can. Now, as time goes on, what you'll see is this. They make the new high. They did make the new low to this. So once that new low has been breached, this is also a broadening formation because we can identify that we made the highs up here to this stuff and the new lows to this stuff. Once continuity changes and we start coming back through, we redraw and we reevaluate what we know to be true. Because of the compound 3 that we can identify here, we know for a fact if it reverses back through, the magnitude has changed. When this 2-2 month occurs, they're now trying to go back to the other side of that range. So you'll see we draw from right to left, including all information, and then from right to left, including all the information. So we would say all of these bars here are a compound outside bar to everything left. Hopefully that makes sense here. Now, the way we use this is to time actionable signals back through previous range. So one of the truths or one of the things that we can identify is given an actionable signal at the top or bottom of the try or the broadening formation, the likelihood of testing the other side of the range is increased. So for example, you can see drawn from right to left. There's a lot of smaller tries in here, sub tries, which we'll talk about, but the bigger try, slight higher highs to this stuff, and then slight lower lows to this stuff here. Once that low has occurred, like we say, we don't know if that's going to continue or not. Then it goes inside. That's an actionable signal inside bar. Then it goes 2 up reversal. So when that goes inside up, the likelihood of it trying to attempt the other side of the range has increased. And you'll see it takes a while, but they're doing that, right? They're very close to taking that out. So drawing right to left and then identifying signals. And we'll talk a lot more about this as we get into this week of the course, but this is just the introduction here. So don't get confused. Just identifying the try, finding that signal. So another way we can identify the broadening formation is as levels of reclaim. Since we know if price fails one side of a range, it's going to attempt to test the other side. When price is stuck inside of a previous range, we can use levels of reclaim and time our signals on the reclaim levels, and it's the same concept. So in this case, you'll notice the mother bar. These 3 bars completely stuck inside of this. And this is why the mother bar is very important. We have a 3, and then this is all a 1 stuck inside. And then it becomes 2 down, taking out the lows of the mother bar. Now at that point, if it were to reclaim this low, where's the other side of the range? Up there, the other side of that 3. So when we create the hammer actionable signal down here, and that goes 2-2 reversal, now we can gauge magnitude. It's trying to go back up there. And we can draw the try off of this, and it says the same thing. And this is why it's important to understand. The try, or the broadening formation, is a depiction of what we know to be true at any point in time. So the hammer weak occurs at the bottom of the try, and then they go and tap into the top of it, and then they expand, which we'll get to. We'll talk about that. We draw them across all time frames, but we'll talk about that. Don't get too ahead. So continuity. It's a common misconception by many people who have tried to trade the strat or attempted to learn it that you cannot have full time frame continuity at the bottom or top of a range, as price was previously going down or up. So when people look at the try, they're like, well, there's no continuity at the bottom of the range, which is false. And this is why when things occur matters and why time is so important to trading. So for example here, this is Google, and you'll see this. So this was that mother bar that we were looking at. They create the hammer 2-2 weak. That occurs at the bottom of the range, bottom of the try, as we've already shown. And you'll see at that point, when this occurs here, the month right there changes to green. So you have a period of full time frame continuity where the 60 guys, which are within the daily here, the weekly guys, daily guys, and the monthly guys are all buyers right down here. So at that point, we have no reason to believe it cannot try and take the other side of the range because we have full time frame continuity back through the broadening formation. So hopefully you can see when things occur is extremely important. When price gets stuck inside of a previous range, also we could say mother bar or a higher time frame inside bar, it will restart the price discovery broadening formation. And given this knowledge, we can use the internal broadening formation or the broadening formation completely stuck inside of the previous range to try and time the breakout of that range with our actionable signals. And what you're going to notice here is target. So you'll see the mother bar very stuck, extremely stuck inside, right? And then notice the 3 on the month here. Now this 3 is an outside bar to what? All of the action to the left, these 4 bars here, and all of this action is still completely mother bar or stuck inside of this. The reason this concept is so important is because when you go inside the previous range, we expect a new broadening formation to occur as long as it's stuck inside of here. And that's why when we say we don't want you guys trading inside bars or trading ones, or at least you have to be very aware if you're trading a 1, this is why. Because if you're trying to take the breakdown here, unaware of the fact that when this goes, I guess, 2 up, 2 down reversal on the month, which is a rev strat, right? 1, 2, 2. When you take that, this is still mother bar. 1, 2, 3 bars still stuck inside of that. So if any change in continuity occurs back through that, they're going to try and test the other side, which would be up here. Because all of this stuff is still stuck inside. It's a compound 1, mother bar to this stuff. So once the 3 has formed, we can then gauge magnitude because we can say on this weekly chart, notice the try, the slight lower lows drawn from right to left, then the slight higher highs to this stuff. So if it reverses up here with actionable signals, the other side of the range is down there. And that signal, this shooter weak here, increases the odds of that occurring. So we will use multiple time frames in that change in continuity to time that. So when this signal forms, if that works, we go down there. And if the signal on the week works, what does it create on the month? It would create a 3, 1, 2 reversal here. And notice, if it goes to the other side of the try, now you are breaking out of this mother bar. So we can use the signals here and here to time the breakout of the range. And when we say it's not incredibly important to be able to draw the lines, this is pretty much why. Because if you understand the 3s and the broadening formations, you would understand where those broadening formations would be without even needing to draw them. Because you can see it's completely stuck inside. They make a new high and fail. We know they're going to try and take this stuff out. So without even drawing it, that's what we want you guys to recognize. And the last thing here, these are broadening formations, meaning they broaden. They will eventually expand. So unlike some traders who are afraid to chase, since we know these expansions occur, we want to seek these out. And this is something we can look for. And these are actually 3 2s on a higher time frame. So if you're ever trading and you see a 3 on the month or the week or the day, the quarter, the year, if that's 3 2, this expansion is occurring. So when we look at the monthly SPX going back all the way into the 1930s, you're going to see they make the lower lows, they make the slight higher highs, they get out of that range, and then they expand it. So whenever we see a broadening formation like so, and they're getting out of the top of it, if it's not back into this, what you're identifying is that this is a 3. All of this action here, outside of this stuff. Once it's above that, that 3 is now going 2. It is expanding and getting bigger. And you'll see over time, it'll happen all the time. There's a lot of smaller ones in here that you'll see, but you'll notice the 3, they go 2 and expand, make it bigger. They have another 3 in here. And then you'll have, up in here around the 1970s, you'll see the try. They slight higher high, slight lower low, slight higher high, lower low, higher high, lower low, higher high, lower low, blah, 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 over and over and over until it expands here. And then the range gets bigger, right? And then another try. This was, I believe, in the 08 crisis. 08 was in here, crash, outside of the try, expansion. Then another try. This is, I want to say it was in 16. Yeah, so around 2016, 17, 18. You get another try in here, expansion, then you get COVID, another try in here, then expansion. And then this was an outside year, so it's harder to identify the 3. But there was a 3 on the year, so another try. And then as of now, we're 3-1-2 year up, expanding that. So it's very important to understand that the tries, and this is something not covered in the slides, I want to add into it, but we didn't have time to. When it comes to the tries and drawing these, it's not so much that these expansions, you have to perfectly draw the try and then you'll know when it's expanding. What's important is being able to identify that all of this action here is outside of the previous action. And if you stay up and out of that, that's still good. It's still going up. The range is getting bigger. So as far as breakout trading is concerned, since we know the broadening formation exists, we can simplify it down to true or false. So you have a broadening formation, you have a previous range. It will break either side of that range. If it starts to fail, that breakout's false, right? It's coming back in, broadening formation. If the breakout is successful, staying outside the previous range, that is then expansion. The broadening formation is getting larger. So with those true and false conditions, then you know if you take it from one side of the range to the other, once it makes that high, either it's got to stay up there or you're going to try and come back through. So hopefully that makes sense. And you'll see a lot more of this as we get into combining signals. And that's going to be in tomorrow's lesson. But the last thing here is then talking about the TTO, or the triangle layout, and corrective activity. So first we're going to cover what is corrective activity. Then we're going to have a little visualization of it, which we've talked about previously. And then what does TTO mean, which is triangle layout, and then higher time frame signals plus TTO example, and then TTOs to create signals, which is getting a little bit into what we'll talk more about tomorrow, but a little introduction towards the end. So what is corrective activity? What's corrective? Corrective activity is going to be a reversal against a higher time frame period of control. So when we identify continuity, we're identifying who's in control. So if the day, the week, the month are all green and the 60 is red, that's triangle out, because at that point it's too conflicted. It's only the 60-minute basis. So that would be an example of corrective activity against a period of control. 3 time frames up and then 1 time frame down. A triangle out, or TTO, is a way of identifying the lower time frame broadening formation. And this is how we incorporate the second universal truth and the third, continuity plus the try. So this is a visualization of this, and it's called TFC bars. We've already gone over this a little bit in the continuity section. But what we'll see is they provide the strong period of control, and then you get corrective activity where the 60 is the only group countering the day, the week, and the month. So this is the period of control. It's going down. This is by definition corrective. It's got to be. So what we'll notice is the triangle, or the TTO, is occurring in here. So they go into recent lows on the 60s. Then they gap up, making slight higher highs to the stuff on the left. And then combined with the 2-2 reversal on the 60-minute, we can see the broadening formation where they take these highs out, failing back into the range. 2-2 reversal. Now we had corrective activity and now a reversal. So anyone was long in here, we're going to try and get them out with full time from continuity down. And then you'll see all 4 of these bars become an outside bar to all these bars left right in here. So they triangle out, stopping people out, and then back down. And the same thing happens in here. You'll notice the 3. That's a triangle. They go inside, and then slight higher highs still inside of the 3. And then the rev strat, 1, 2, 2 here. And then that gets you out of that mother bar. So when you're timing the broadening formations and lower time frames on like a 5-minute chart, this is a 60, on a 5-minute, you'd have the broadening formation in here. Because you'll see they went up, they went down, went back up, and then all the way back down. And then similarly, if we zoom in even more, we have some triangle outs in here. We had the new open of the day, 3, broadening formation. They poke up, they go inside bar. And then you'll notice they go inside bar down, changing the day to red, the week and the month also still red at that point. Full period of control here, back through this 3, broadening formation. They take them both out. And that's going to continue over and over. And then you'll see they change the period of control here. And at that point, continuity has changed. All these 3 time frames are confirming each other. Now price is trying to go higher. So you can see the periods of corrective activity, or triangle layout, it's when you have this 1 time frame countering the 3 time frames here. There's also very slight green days in here. But as far as we know, when those 60s break back down and the day goes back red with the 60 red, whoever is buying to start the day, they're out here. And similarly, whoever is buying to start the day in here, they're out here. So hopefully you guys can see that visualization, and very, very good with combining continuity and seeing the triangles. And I know there's going to be tons of questions. This is going to be where we have a lot more confusing stuff. So we will get to the questions at the end and we will clarify as long as we need to. But the next thing, TTO means triangle layout. This is a broadening formation. So what we mean when we say this is whoever was long or short before has now been stopped out. And thus, we can look to take a position on a reversal back into continuity. And the reason we call it a triangle or a tri or a broadening formation, specifically a triangle though, is because we can draw the tri. We can say they longed in here, up into this stuff, and then they stopped them out down into here. And that creates, you can see the triangle. It's just another way of identifying the broadening formation. So when we get this 2-2 reversal back up, where is it attempting to go? Back up into the top of the triangle. So just another way of identifying that all of this action here is outside of everything to the left. And you'll see this try started way down in here. Slight higher highs, lower lows, higher highs. They tried higher highs again, and then lower lows, and then higher highs again. And this is something we actually had on the nightly vids and the utilities. So when we're identifying high probability TTOs, intraday specifically, but this applies to all time frames, we want higher time frame signals in force up or down, and then a TTO or corrective activity against that signal, and then a reversal from that new lower high, and then we'll target the other side of the triangle. So in this example, we'll see NEO. Notice it has a 3-2 continuation in force on the weekly. So we have all week where that is in force as long as it's green and above the 3, back through a previous range. We'll then see on the 15-minute, notice your triangle. They make the new lows, reverse, make the new highs. You can see they started in here, gap up, which we'll talk about, but they gap up and sell it. All 4 of these candlesticks on the 15 become an outside bar to everything left. And at this point, the week is still a 3-2. Then you'll have the hammer, 2-2 reversal 15. When that occurs, what's it trying to do? Potentially the other side of that range. And you can see the weekly guys and the intraday guys bring it all the way back up. So we want to have a higher time frame signal in force and lower time frame triangle out. Slight lower lows back in the direction we should be going. Now, as far as TTOs are concerned without higher time frame signals, we want to ask ourselves the question, if this signal works, what will that create, negate, or do? And this is extremely important. This is the question we ask ourselves every day we trade. If this signal works, what will we negate, create, or do? So what that means is negate, changing continuity. Will we change any of the participation groups? Create, is this going to make or create any new signals for us? And then do, is this going to trigger anything? Any new signals going in force, etc. So the XLU trade was an amazing example of this. So you'll see, unlike the one before, we draw the tryout here. So just like we pointed out the triangle, it's the same exact thing. Now, they go 2-2 reversal. It's not actionable, but it is a reversal from the bottom of the range. The magnitude of that 2-2 is what? It is to make the compound 3 to this bar here. So if this 2-2 works, and we take that out, our question is, what would that negate, create, or do on the other time frames that we track? The 60-minute, the week, and the month. So in this case, what we'll see is if the magnitude of the day is reached, we will negate the week and create the weekly 3-2-2 hammer signal for next week. So much like a good pool player, we like to set up our next shot to add to the position by creating a position here, negating the week, which we can actually use as another entry we'll get to, but creating the weekly signal and then adding to our winning position once that weekly goes in force. And then the same question is asked. If that weekly works, what will that negate, create, or do? So you can see the 2-2 week back into the 3, it would take this out. What you'll see is on a quarterly basis, the 2 down, 2 up week would create the inside quarter 2-1-2 hammer actionable signal reversal with a pivot machine gun. Notice combining all the things we've just talked about. And then it does. So the magnitude of the week takes it in force and then boom, up they go. At this point, the Utes, they did trade up into this pivot and now they're drawing down a little bit inside month this month. So I don't expect everyone to understand this right away, but you need to train yourself to see this, because after you can grasp this concept of creating signals or confirming and triggering signals, which we'll get to next or in the next class, you'll understand why we want to use the tight stops, which we will talk about tomorrow. And this explains a common strat analogy from Rob, who created the strat. He says the strat is more like a home run derby. It's not the batting average that matters. It is your slugging average, which is the trades that just keep on going. And we'll cover this in the next section, where we're going to introduce combinations and specifically the stops, position management, and all of that stuff. And before I get to questions, this is going to be the hardest part, which is why we were very diligent in saying, like, we need you guys to understand continuity and be able to pick out the signals, because once you understand those three universal truths, everything combined together can get confusing, especially for new people. But you will be able to learn this, so I'm willing to take any questions that you guys have, and we will just dive right in. Yeah, so I actually I have some supplemental stuff for this here. I'm going to bring it up in here. So this is some stuff I will add. I posted it to Twitter, but when it comes to the expansion, so I had a question. Is the expansion when TA breakout traders win? So what the expansion is an unwinding of positions. Since we know eventually this range will expand, once you are outside of the previous range, people unwind their positions, meaning people are obviously trying to shorten here, right? Any shorts that had not exited yet, they will chase prices higher as we drift away from this range. And what you'll see is anyone that has shorts within this range in here, as this goes higher, they'll drift away. And the other thing that's simultaneously occurring is you have buyers taking the offer. So let's chase things up. And when it comes to like things like NVIDIA, where like they make the highs and then keep going, you have a very aggressive buyer, and you also have a lot of people shorting it, which is similar to what Tesla did. So this is what's occurring when the expansion occurs. And yes, breakout traders technically do win in that sense, but it's not quite relevant to us, because we know once it's making this new high, if that's a breakout, it will not reverse. So they go two up, making the new highs to this. And now that breakout's true, unless they come back in, then it's false. So hopefully that makes sense and explains what you're thinking of there. Yeah, so the other question was, why was the 2-2 reversal not an actionable signal? Because when it comes to, and forgive me here, one sec. So when it comes to XLU here, it is a reversal, so we can take action on that, just understanding it's a reversal. But what we don't have is an actionable signal. It's just a reversal. So the reason there's a difference there is actionable signals are something we can look for after the day has closed to expect price movement. When this is a 2-down day into exhaustion risk, we can't expect price movement because it is not actionable. Whereas when this momentum hammer forms here, that is actionable. We can take action here. And we have that on the nightly video list before that occurs, saying if this works, we will negate the week and create the weekly hammer, the same way this 2-2 occurred intraday, and we picked up on it. So when it comes to actionable signals, we can see it before that occurs. When it comes to things that are not actionable, like the 2-2 in this case, where it's kind of a kicking variation, I apologize, it sounds my phone, but it's kind of a kicking variation here, where the kicking pattern, it's just not a full gap. This is something we will pick up on the day of, either when that gap's here or intraday when we're scanning for reversals in force up or down. In this case, and this is something we'll talk about with the scanning part of the course that comes at the end, the whole market was dropping and then utilities went 2-2 day. So while the market's crashing, they started rotation into utilities. And this was something we picked up on right in here. And we actually picked up on specifically, you'll see SO. If we go to the charts, we picked up on SO in here, and we also picked up on duck in here as well. Notice the broadening formation, duck, 2-2 day in here. And that's an intraday thing. That's something we did not have on the list pre-market, or not pre-market, but the night before. But pre-market, we can identify the gaps, and then intraday, we can identify reversals in force that are not actionable. So hopefully that answers your question. XLU 3-1 on the day, yes. So for an example of what we would be looking for, they're at new lows. So we draw from right to left. So we can either draw into this low here, and then draw from, actually it looks like we have the slight higher highs. You could technically draw it like this, but given that you'll see all this action here is stuck inside of the range to the left, what we'd want to do is draw from right to left. Notice the new high, slight higher highs to this. And then before, the try looked like this. They went reversal, 212 down, 212 down. Then they make the new low here. We redraw. Boom. Now they have the 3-1. So if that works, what would that do would be our question. Well, the week would be a 2 down in green, 2 going 3. The month at this point is an inside bar and red. So it's directly countering that, and we'd be trading a 1. Now, given what we know about ones, when we draw this out, this is how we time the break of it, the ones. If that works, it goes up there to the top of the daily try. And that would break you out of this 1 on the month. So you can see, when it comes to timing those breaks, we use the try to then say, if this works and it goes to magnitude up in there, 72.80, we would be 10 cents away, barely. It'd be 11 cents away from taking the month 2 to the upside. So if that works, it would change that. As far as Daku, I had a question today. What we'll see is this. On the daily basis, your daily try, drawing right to left, you have slight lower lows. Then your last higher high was higher highs to this in here. So slight higher highs. If we go to the month, what you'll see is the month, all these bars here stuck inside of this. So your levels of reclaim, or your mother bar, looks like that. You go to the week. The weekly try is also going to look just like the daily try. So at this point, why can't we expect it up this week? It isn't going up. It's an inside week. Now you do have a change in continuity. You do have a daily actionable signal. But as far as high probability trading setups go, we want this day to trigger the week. As you could attempt to set up the inside week for next week, but as an intraday trader, which most of us are doing that, at least in Strat, a lot of the stuff is intraday. This is not something I'm interested in this week, because this week, neither the buyers or sellers are aggressive enough to give us a 2, to give us a trend this week. So if you're a swing guy and you're like, yep, I'll take the daily, and if that works, I'll add when it goes on the week, and then if that works, maybe we go outside month or attempt to go 2 month next month. Sure, you can try and do that to negate these guys. But as far as we know, it's like you're nowhere near taking this out. So I'd rather wait till next week. And that's why we say the strat's going to customize itself to you, because some people will do that. Myself, not going to do that. It's trading a scenario 1 on the higher time frame. It's not what we're looking for. Whereas if we went to like XLU, for example, it was against continuity in this case. And that 2-2 occurred. But the whole market was dropping, and this was a simultaneous break, which we'll get to. We had a lot of evidence that every XLU stock had reversed here. So when that occurs, at that point on the month, we were a 2 up, but red. So the buyers were in control, sellers were more aggressive. And then we saw the sellers, we had no evidence of them when that day reversed, because the daily 60 guys were in control, they get immediate control. And then if that works, the month is still a 2, and the week is a 2. So we have the 2 attempting to go 3, just running out of time, creating the hammer. And if that works, the month is still a 2. It's still going up. And then next month, we actually had the momentum hammer. So as far as the difference, this is in conflict when we take the daily signal, where the day and 60 were conflicting the week and month. But it was 2s. We had 2s across every time frame, the day, the week, and the month. Daku, you're missing a weekly 2. You just don't have it doing anything. If this went 2 down and then went inside day back up, you could set up the weekly hammer for next week. But since this is a 1 this week, you're just more likely to chop around in here, especially going into the second half of the week tomorrow. If we don't have 2s by like Wednesday on the week, it's just hard to become 2. When during the week, there is a high probability of weekly signals working. Same with other time frames. I guess I'm confused by your question. Can you please reword that? As far as exhausting, are we looking for long wick candles forming a hammer or a shooter? I mean, that we look for actionable signals. It has to be actionable. That's the prerequisite. And that's actionable for if we're looking for the signal before it occurs. If we're just watching Daku and let's say we want to short it or we want to long it, whatever's going on. When this 2-2 week occurs, could you be short? Yeah, it's a weekly reversal. It's just not actionable. So this is not something we're scanning for, because there's specific things we look for to increase our odds, which are actionable signals. We have covered those already. Any 2-2 reversal is still a reversal. It's just not an actionable signal in the same sense. So I had a question. Could you look at SPY today and use the daily and weekly charts at the same time? We use the day, the week, and the month, and the 60s. So we're going to use them all. SPY's a little difficult today. It was a little choppy in the afternoon session, but they did get moving. So in this case, the week was an inside bar. It did become a 2 to the upside, I believe, at the close. Yep, by a penny. So here's your new 60 broadening formation, right to left. And we'd redraw that every 60 minutes. For those that were asking, every time the time frame changes, if we can redraw it, we do. In this case, we would draw it out in the morning, something like this. And then you don't change that 60 try until it makes the new high. And once it's done that, redraw like so. So hopefully that makes sense. If we then look at the day, you had the 1-3 rev strat day, which hit magnitude. The week was an inside week to start, but why did that inside week become a 2? Because you have the 3-1, 2 down in green on the day. The magnitude of that 2 down in green is to take out what for the 1 bar rev strat? It would be to take out 536.89. What would that create negator do? It would take the week 2 to the upside, confirming the 2 up month of the start of the month. So the first week goes up. The second weekly open, which is the decoupling of the week and month opens, confirms that by going green and 2 to the upside. And that's before CPI tomorrow. We have the big news events pre-market tomorrow, so that's more what I'm interested in. Yes, so as far as the intraday stuff, what you'll see is they did have the hammer 60 in the morning. Did not work. 3 against. So once that's a 3 on the 60, they have the new high and the new low. When we talk about the expansions, this is why it's important. And one way to get good at this is just identifying the time frame broadening formations on like the oneers. You can go on the 3-minute, the 5-minute intraday and just get good at drawing them. Don't trade it, but just learn how to draw them. So this is something we drew during the intraday trading. We had the slight highs here. And then by the time we got off, I believe it was right in here. Slight lower lows here. So this is our range. Now, notice it broadens. You know, 2-2 reversals off the lows, not actionable. And then you had the bond market, what would you call it? It was bond auction. That was right at noon, which is something we were talking about in the morning. We said that could probably give you some movement. Notice they go 3. They make the very slight higher high to the broadening formation. Then they go reversal down into it. So at that point, they're trying to take this out down in here, but they were too strong to do it because they go inside bar actionable signal back up here. So now if that works, our question is, what would that do? And this is why it's important not to draw the lines, but to understand it occurs. So what we'll see is they make the slight higher highs on the 5-er. When it goes 2-2 reversal, these 3 bars become compound outside to this stuff. Hopefully you can see that. They poke up, new highs to this. and they poke down, new lows to this, not weak enough to take this out. When the inside bar breaks, if that does not reverse, it's attempting to take these guys out. What would that then do? That would expando that bigger broadening formation. So if we go to a 1 minute, what you'll see is this. And this is why it's so important just to know it occurs. The broadening formation occurs. It's a phenomenon, meaning when you fail one side, you attempt the other. If you get a reversal before it hits the other side, we don't know, because this is trending down, trending down, trending down. Once it reverses here, it's no longer going down on the 1 minute basis. So is it taking this out on the oneer? It's not trying to anymore. You'll see on the oneer try, they poke up, they poke down. This range gets a lot bigger. Then the reversal occurs back through the range. And then the expansion occurs above this for that little 5 minute try, which we can also identify in like a 15 minute. And I can blow this up. I forgot to do that for you guys, but we can go in here. So you can see in here, slight higher highs. And then we had slight lower lows to this stuff. Redraw to this. 3, 1, sideways 30. These two 15s stuck inside of this. And then 2, breakout expansion of the try. And then they hit the magnitude of the daily outside bar at the end of the day. And you'll also see the internal try in here. So they go 2 down, go nowhere. They go 2 up, they go nowhere. When that occurs, these 2 bars get stuck inside of all this action to the left. So we then look for that new try. And you'll see then, if we drop them down, it's a chop fest in here. But they have the slight higher highs, slight lower lows. You get another try in here, chopping around. New low, back into the range, new highs. And this is why we don't want you trading this. They're oneer signals, they last 1 minute. Whereas like a daily signal lasts all day. It's much easier to trade. But you can identify and you can see the broadening formations everywhere in here. And this is why we don't want you guys going crazy, forcing yourself to draw a try on every single time frame, because you will drive yourself nuts. But understanding that occurs and being able to gauge the magnitude of that is what is the most important part of it. Because if they can take out the lows, then go inside bar reversal down in here, you know they're attempting that other side. So as far as actionable 2-2 reversals, 2 up in red or 2 down in green, that's something we look for because it's a failed 2. Or hammers and shooters on 2-2s, that's something we look for. Or rev strat 1-2-2, like all that stuff is stuff we look for. As far as just any 2-2 reversal, you're going to get killed doing that. And that's why also all 4 time frames are important. You can't go in there and just say, I'm going to trade inside bars and trade every single inside bar. You'll get killed. You need to know what the condition of all those bigger time frames are. Because let's say SPY in here, let's say SPY is an inside day, and then you get the 3, 1, 2 to the upside. If it's an inside day, more than likely it does this. It goes 3 on 2 up, and then it goes back down. Since that's a 2 going 3 rev strat day, it has the magnitude to go take that out, and then they do. Obviously, they had the smaller triangle outs in here, but they do. So the question is, actionable signals are always in reference to the previous bar. No, we scan for them as they're occurring. On the bigger time frames, we can take signals to create signals. So if we were on, like, let's say the SPY 5 minute here, and this is from last week, but let's say this 5 minute, let's say it's an inside day. So you have 2 down day, inside day here. So if that goes inside up and changes what's occurring here, which was the beginning of, let's say, the week, you would create weekly 2 going 3 or weekly hammer, depending on how long you had in the week. So like if this occurred on a Wednesday, you're going to create that weekly hammer or the 2 going 3, and then next week, you would have this, the hammer here, because that fiver created it, or that daily created that signal. So it's not just in reference to the previous bar as far as looking for them. As far as taking action, yes, always in reference to the previous bar. Because we want to see these guys are trapped in shorts. When we take the offer, we want it to go. We don't want it to just sit there and do nothing. We want it to go right away. So whatever they did the previous bar is what's relevant to us creating that winning position. And you'll see that exact same thing actually happen today. Some people trade that in the futures today. Inside bar, actually it could have been a 2 down. I believe it was inside on the ES. Yeah, so it was a 2 down here. Momo shoot and then failure to do that. I believe on the ES it was inside on the 5. Could be incorrect here. Yeah, so on ES futures, that was the inside bar. So a lot of futures guys were doing that this morning. But you can see on the ES futures, this is a great example of the internal try. They're stuck from these highs to these lows. Notice the new highs, the new lows, back into the previous range. Once it makes the new highs, they then break the mother bar, or the range that they're stuck inside. So it starts very choppy and small in here, gets bigger, boom, gets bigger and gets out. So we'll get to this once we get to the execution. I guess we'll touch on it a little bit here. But when you are looking at a chart, so tomorrow if you have time intraday and you can get on the oneer and just draw the oneer tries out, what you want to do is you want to talk to yourself and you want to say, I am, like, if you were actually trading, right? I would long here because of this actionable signal confirming what I know to be true about the daily signal or weekly signal in force. And the magnitude of this signal is to do this. And then it breaks and you'd say, this is where I'd be in. And the best way to align what you know and your actions is to get it external, get it outside of your head. Because what a lot of people will do is they'll get on and then they'll just see things and do things, right? Just click, 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 see and do. But you're not thinking then if you're doing it that way. If you have to say it out loud, you have to make it coherent, which is why we only talk in universal truths and what we know to be true. Because if you can say this is a 2230 triggering a 60 actionable signal, and I'm going to do it here and add to it here because of the actionable signal telling me I should be taking action, and it's confirming full time frame continuity, that's your whole trade plan. And you can see that, right? You should be able to identify that on the chart. No, actionable signal, you need to go through that whole section again. That whole section, Rev Strats, inside bars, 3 2-2s, 2 up in red, 2 down in green, all that stuff is stuff we look for. Super important. You have to nail down all the actionable signals and how we talk about time frame continuity. Conflicting and confirming and changing. Plus the actionable signals. Super important. A SPY 2-2 reversal on, say, the 60 that you would trade the lower time frame. As far as recently, we haven't had anything crazy lower time frame into higher time frame. This morning, actually, there's an example. The inside 30 cooks up. So 10 minutes before the 60 flip, we're identifying the inside 30. So we did talk about on the stream today. Then they break inside and up, and the magnitude of that would trigger the 60 group here. So 2 potential entries, they go up, and then that 30 signal exhausts here, and they did bring it back in. So just didn't go right away in the morning. And then once you had the bond auction, you got your big 3-2 expansion, and then they did what they were supposed to. So this is the thing. When you see an actionable signal occurring or forming, let's say it's an inside 60. If you find an inside 60, the lower time frames will be setting up to make that happen, if it's going to. Or like, let's say SPY, for example. We had the 2, 1, 2 into highs, exhaustion risk on the 60 minute. Why is that? Because we're into recent highs, right? It could be a crowded trade. We can also identify the broadening formation. which we did this last week Friday on the stream. Here's the broadening formation. These 2 bars outside of this stuff. So when it goes into that, that's a crowded trade as far as we know. We don't know if it's going to expand or not. Has continuity, so it could have, but didn't. So it goes up, comes back in. The condition goes from breakout to failed breakout as far as we're concerned. When that sets up, we want to ask ourselves, well, if that reverses, it could become a RevStrat 30 or RevStrat 60, 1, 2, 2. It's not an actionable 60, but it would become a 1, 2, 2, which is a RevStrat. Countering of that inside bar break. So when you're looking at that, you'll see here, you have an inside 30 here. So you'd have the 2, 1, 2 to the downside, which would make that happen. So anytime you identify a higher time frame signal, the lower time frames, they'll be there for you if that signal is going to occur. And that's what increases the odds, which is why we want 60 signals, daily, weekly signals, monthly signals, and then you can drop the time frame and go into it. So if you have a monthly signal, the weekly will be setting up to make that happen, or maybe it's a continuation. But more often than not, if you have an inside month, you'll have an actionable signal on the week. Use. So I have an example for my question from Friday. SPY and QQQ 60 hammers this morning are very different. SPY made a high, then a low, lower high, then closed. Q's made a high, then a low, then a higher high, and then close. My question is, the Q's less likely to work when it triggers the 2-2 hammer? No. This morning, the Q's actually were more likely to work simply because the Q's were already green on the day. And the Q's would trigger a 3-2-2 to the upside, which is something we look for. So they triggered it, stopped some guys out on the 60, and then went. And that's all with that bond auction today. So like if you look at Q's, for example, that you didn't have a 30 signal, yeah, but that also tells you it was stronger because SPY went inside, Q's went 2 ups. Q's has relative strength. So in the morning, that goes up. And if we look at that daily basis, you'll notice the magnitude of that 60-2-2 RevStrat was to trigger that 465.19. They just didn't go right away. They stopped some guys out. Corrective 60 against the day, the week, the month. Corrective triangle they out. They stop them out down here. And then here's your 3. These 2 bars outside of that. And then the 3 goes 2 and expands. And that's not to say if when you're trading you see that and it just makes you uncomfortable, you don't want to take it. You don't have to. You can, and this is the thing with trading is once you know what we're looking for, actionable signals, continuity, broadening formations, all of that stuff, you can sit there and wait, right? Unlike, let's say, a lottery ticket where you buy it, a scratch off, and you have to scratch off every single box, and then if it's a loser, it's a loser. You can sit there and wait until you know it's a lottery ticket that's probably going to work, given all the scenarios and truths line up. So Kedar says if one identifies there's a daily actionable signal on the lower time frame, the price is moving against it multiple times. So in this example, Qs, why does that occur? Because of our short-term exhaustion risk. Once the day has triggered, the 60 is into the top of its 60 try, which is why we use the 60, the day, the week, and the month in order to understand what we're doing. So is that ever not going to be the case? No. Every time it triggers the day, you'll have 60 short-term exhaustion. But what's relevant is the condition of the previous day. So since Qs was 2 down and green yesterday, what this is a continuation of buying for longs. So we're not stopping anyone out really from yesterday because they were long yesterday, right? Whereas if we're looking at let's say down in here, for example, the hammer counter shooter, hammer signal here. We pretty much expect that that should go right away because there's potentially guys who are still short in this. And it's also a momentum setup, which is the shooter counter by the hammer. Whenever you counter an actionable signal like this, it's considered momentum. So in this case, very different, where these guys are short and we want to stop them out, compared to in this case where it's a continuation of the long buying. It is a reversal, but they were long yesterday, which is why we want to grab signals to make that happen, which is where the broadening formation comes in. Because if it's going to go from the bottom of this try in here, which you can draw out, back to the top of it, it would trigger the daily guys. So we can get long, long, long. Once it triggers, if that's going to work, good, we're already in. If it does not, stop them out. Then we will look for a new way in, and we already made our money on the way up in the morning either way. Whereas you can see, for example, today, Cat, this was an example from the nightly vid is with the industrials. The 131, this is pointed out by a member pre-market. They go in force, and they pretty much go instantly. We go down into a oneer. You'll see right in the morning. They go 2 down, inside oneer, boom, right away. Why is that the case? Because they bought yesterday. So they have to stop out. They have a trap position. And whoever is long into this 3, they're also getting those guys. And then they tap the magnitude to the penny. The industrials also did the same. So you'll see, this is from the nightly vid. It didn't keep going, but it did what it was supposed to. Take it here, into here, and then that's the bottom of your 3 on the daily, which gives you that short-term daily exhaustion, like so. Go in here the same way. There's not a signal in here. There's momentum shooter, but you'll see the same thing. Right away, anyone in the industrials long yesterday, they're getting out. So super important with those signals. You want them to be trapped, because then that's when you get instant price action. Too fast, inside day. These guys were long. We take this out, stop them out, and they sold. Did not stay down, but did what it was supposed to. So if you see that condition, very much different than the Qs. And this is also, so when you're in a period of lower volatility, if we go to the VIX right now, it's at 12, 13, right? So relatively low volume compared to years past. Or you can see we've had some very high volatility markets where we're above 15, 16, 18 at a lot of points. And if we zoom all the way back, you can see during COVID, VIX is nice and up there. So trading was really good after 2020 and through all of 2023. So when the VIX is down here, like 12, 13, you have lower volatility. The Strat loves volatility. We love when it's volatile because if you're doing what you know to be true with the continuity and you can identify the groups, people are getting killed left and right, and they're getting stopped out and repositioning over and over. So you get a lot of really good action. When you have a period of lower volatility where the VIX is low, that's where continuity is super, super important. Because if the day, the week, and the month are all green on the Qs, when this 60 goes red, time frame continuity, if you go to the 60, what did we just talk about with corrective activity? Notice how this is corrective here on the 60 and this is corrective on the 60. So during lower periods of volatility, time frame continuity is even more important because it allows you to see they're stopping people out, they're stopping people out. And it's because you get these more grindy markets where you might get some good, really good rally days and then they grind. But you can see we still have the period of control where the week and month are in force and very green all of last week. So we have triangle out, corrective activity, and then back up, triangle out, rev strat, back up. Not strong enough to take them out to begin the week, inside week to start. Then 2-2's back up, completes this 3. Corrective activity, trapping people short, stopping guys out. And then goes into expansion mode above all this stuff with full time from continuity. right off the open. We don't suggest new traders start at the open because the 30-60 stuff, you can get that intraday and you don't have to push buttons as quick. But off the open, once we get to the gappers and stuff, we'll talk about more what we look for. But the reason we say to let them open is because not many traders can go in here, try the 5 long, it doesn't work, flip short for the momentum shooter here, win, and then cover and flip long again to take the other way. Because mentally, like the psychology of that, a lot of people just can't do that. So when we say let them open, what we're meaning is let the 60s decouple, let the 30s decouple. And then once you have this strong period of control, the day, the week, the month, all green, now you can identify corrective activity, corrective activity, corrective activity, and you can see what's going on. So that's why we say let them open, and I hope that makes sense. Because once it's this stuff, or like you just look at the chart, right? Like corrective, corrective, back up. Once it's that stuff, that's pretty simple. When you have this conflicted stuff at the open, it's where people get very confused. What do we scan for intraday? The same things we scan for everywhere else. Inside bars, rev strats, hammers, and shooters. And intraday, we're looking for ideally 60s into time frame continuity. We want to see 60 signals actionable with the continuity. It's like Apple today was a good example. They rallied all morning. There was no 60 signals in here. We did mention the continuation in here for those that wanted to buy because it was full time from continuity. You had the week or the daily 3-2 expansion, like we talked about last week with Marvel when we're talking about the 3-2 reversals. 3 changing continuity aggressively, and then 2 reversal above that. And you'll see the condition of yesterday, shorts were short. So when that breaks, what you'll notice is this. They break it, they do go slightly sideways, and then they're gone. Because the condition of those guys being short yesterday tells us it really should not be coming back down. Unlike Qs, where people are long into the Qs yesterday, this was different. But intraday, when this 60 goes inside, momentum, measured move of this stuff, you can do that right there. And it's not amazing, it's $1.75, but that's still a trade. And that was something we said in the morning before we got off the stream to watch for that continuation stuff. But there's that. We can see there's some stuff pointed out in JNUG this morning. We were kind of scraping the bottom of the barrel trying to find stuff because the morning was pretty choppy. But the 62-2 reversal to make the new lows to this stuff, they did it. Didn't keep going, so small winner, so be it. GDX similarly had the measured move. They dropped about 30 cents. Inside measured move, dropped about 30 cents again. 29 cents, 29 cents, perfect. And that was about it. Notice they go into short-term exhaustion, then they reverse back in. So we said they're going to be short-lived. More than likely, they're confirming last week's stuff, but it was all momentum. But you can see it's all 60 actionable signals, what we're looking for. And then when that 30 is in here, there's the shooter here that sets that up. Wasn't something we talked about, but what we're looking for intraday, and we'll talk more about that with the scans, is mostly we want continuity, we want good magnitude, and then give us additional signals to confirm that. Like, for example, Microsoft. There was some 60s in the morning. You have a good continuity. The day opened here, very green. And we had that on the list. Microsoft, along with some semis. They went 2-2-30 after this corrective activity, and they were just gone. 2 down in green, alerts you to it, and then 2-2 in here. There's also the 3-2 expansion into full time from continuity. And all of that stuff was confirming the inside week reversal above that. So combining, or a combination of the weekly signal plus lower time frames confirming it, plus full time from continuity. And then, once it's up into here, we don't know. In the middle of the try. So with the broad informations, what people want to do is they want to see Microsoft down at this low and buy it right at 388.55. What we want to do is let it go into the bottom of the try, create the signal, and then we go after it. because that's when we can expect the aggressive directional, it's just going to go straight up movement. Same with this type of stuff, and that's just easier to trade. But as far as like letting it go first and then getting in, if you're confirming signals that are already happening and still have magnitude, yeah, we can do that. Like if we're going to the daily try in here, you let it get into the middle of the try, and then you take the 312 day in this, or maybe the 222 day here to finish it off. Yeah, you can do that. What most people will do though is this. They'll go in here and they'll be in here trying to trade this stuff, where all of this action's getting stuck inside of this. And then they'll get really chopped up. And then the range gets big enough where you're going to see the range starts like this. Slight higher highs, slight lower lows. This is outside of that. Then it gets slightly bigger. Makes the new high here after the hammers back up. Slightly bigger. And then the T2 here, even bigger. Then you'll see the 2, 2, 2 here. And then it gets even bigger again. So a lot of people, they're not patient enough to let this chop around, get the range big enough where you're going to have action that's worth trading, and they'll just get very chopped up in this stuff. So we do not want to do that. And I apologize. So his question was, if we're drawing broadening formations on the day, is it good to take trades in the middle of the try after identifying the participants on the 4 time frames? Or should we look to trade at the edges of the broadening formation reversal, more so back through the range? That was the question. And keep them coming. Let's see a few people type in here. Coin. Break down the tries. I don't see any new lows. So given we know the phenomenon exists, they made the lower low on the month here, and it's currently month in green here. So they're trying to make that higher high. They haven't done it yet, but since we know the new low will create the new high, that's what they're trying to do. On a weekly basis, it is a 1 doing nothing. So the range has just contracted. Now the try is completely stuck within this. On a daily basis, you have a daily hammer, and that's completely stuck inside of last week's range. So if that hammer goes in force, you would have full time from continuity. The magnitude of that would not take out last week's highs, which are up here. So if you're trying to do something like that, you have to be extremely aware you're trading an inside week. But your try, if we go on the weekly, it looks like this. Slight higher highs, slight lower lows. Now it's a 1. So how many sub tries do you draw inside a bigger, larger time frame broadening formation? Do you limit yourself? You're going to drive yourself crazy if you try and draw every single one because it happens so often. What's more important is understanding that if you fail one side of the range, you will attempt the other side, engaging that magnitude. So like if you're in here every day drawing every single one or broadening formation in here, you'll drive yourself nuts. What we want to know is if we go into new lows here on the SPY, taking this stuff out, and then reclaim, where's the other side of that? It's like, well, this is completely stuck inside of what? Sideways action. Well, we're stuck inside of this stuff. So if we reclaim this low, it's attempting to go back up there. So just understanding that that occurs. And then similarly, you can see on the 1 minute, it's like it happens. It's just all the time, all the time. So they have the slight higher highs, the slight lower lows. Here's the try. 2-2 hammer on that news event at 2:01. This was the bond auction. Then 2:02, 2-2 reversal. It's your turnaround Tuesday on the oneer of the bond auction, where that second oneer negates the first one. Anyone short into that, boom, other side of the range, and then it breaks out of that, and that's what gives you the high day. So just understanding that it occurs is a lot more important than being able to draw it all the time. Which is why we suggest newer traders, if you're going to learn to just see the reversals and the tries, you can hit the oneer, but we don't suggest trading that per se, because you're not going to be able to. It's going to be very difficult until you are extremely, extremely comfortable with the strat. Even right now, I don't really trade the oneer much. We watch it for like slight triangle outs, and when things are really cooking, it's like it's something like Apple where they go like this in the morning and they're up $5 in the first 30 minutes. That's where the oneer and the intraday continuity becomes more important. So you'll see the slight little triangle outs in there. They get stuck inside, then they expand it. You'll see the very slight 3 poke down and then back into this 3, and they go back to the highs. Let's see again, 3 poke down, back into the 3, hammer counter shooter, back to the highs. So you can see this stuff, and you'll see it all the time, but very important just to know that it occurs, because then you can visualize it. You can say, well, here's the new high, here's the new low. When they go 3-2 here, where's it trying to go? There. And when it goes inside up here, where's it still trying to go? Here. And since this works the same on all time frames, you get to slow it down. You can go on a weekly chart, and it'll take many, many weeks for this stuff to happen. And in Apple's case, Sarah pointed this out, but you'll see this. They had the big 3 yesterday on the day, and then the 1-2-2-60 in the morning, which put it back into this 3, back into this 3, which gives you that try. So you don't have to draw it out. You just have to know. Once it starts reclaiming all these previous lows in here, they're trying the other side. And it makes it extremely easy to look at the chart and know what you would want to do. Like when SPY's back above this, I'm trying to go back up there. Same thing happened in the Qs on Monday there. Reclaims this right away. They're trying to go back up. AbV is a great example of this, slowing it down on the weekly basis. I have to sneeze 1 sec. Sorry about that. But you'll see the 3, 1, 2, 3 weeks stuck inside, broadening formation on the weekly, and then they reverse back through. 2 down in green, reclaim of 157.65. Where's it going? Back up there. And it does. And this is something we talked about in the weekend video during the week of, or what? Let's see. It was Tuesday. We talked about in the Tuesday night video of last week. And this is also a good example of when the continuity changes, the try is subject to change because it is a visual representation of what we know. So they have the slight lower lows in here, higher highs in here. 2-2 reversal here. It's attempting to go down there. They go 2 down, hammer, change in monthly continuity. That changes the try. We would redraw, and this would be your sub try in quotations, where these 3 bars went outside of that. So when this goes back up, knowing that it occurs, they would be trying to go back into those guys if they're strong enough, which is the same as saying this 2-2 reversal month, magnitude's up there. And now the question is, given that your daily try now looks something like this, or you could draw it to include all the information, something like this, Can we get some new signals to try and get that thing expanding again? Head out. That's all good. We're coming into 7:30. I'm just tabbing through some stuff for tomorrow. Got some good SMH setups into tomorrow. The continuity script, really, you should not use it as a crutch to not look at all 4 time frames. And I don't want you guys to do that. It's just a way to visualize what you know to be true. So what we're doing intraday, or what I'm doing, is I already have done my analysis the previous night. So and I'm looking at most of the market. So even when you guys mention things intraday, for those in the chat that are like, hey, like this action will signal this, this, and that, more often than not, I've looked at it the night before, so I know what that higher time frame looks like. If I don't, I'm pulling up all 4 time frames. So like during the day, this is what we're looking at, all 4, right? But on my own charts, when we're monitoring things with continuity that we know are moving, I will keep up the 60-minute basis, and then each 60, I will be looking at actionable signals that are forming. Same with the 30s. So I'll be tabbing through between the time frames. But ideally, we want the 5, the 15, 30, and 60, plus knowing what the higher time frames are already doing. When we're using this visualization tool, it's just to show you guys what corrective activity looks like when you have it. It's like if you already know spine cues are going up, month, week, day, all that stuff's green, and you can gauge your magnitude of the rev strat day, then the continuity script is extremely useful. If you have no clue what the higher time frames are doing and you're just trying to trade off of this, you're only using one universal truth, and you need to do all 3 at the same time. And again, this stuff is very much going to be the hardest part of the strat to learn. Tomorrow, we'll talk a lot more about identifying combinations of multiple signals, signals to set up signals, and all of that fun stuff. So we'll have more talk about this type of stuff. We'll have a good chunk of examples to go through as well. But just understanding if you fail one side or try on the other, how to draw that broadening formation, and how signals at the bottom and top of the try are extremely important, as well as that internal try. Those are the things we want you guys to learn today and going forward. And although this is a 2-week course, at the end of the 2-week course, you're still going to need a lot of practice. So it's not going to only take 2 weeks to learn it all, because we're giving you it all. But that being said, as we get to the end, we do have some very simple trade plans for those that want to learn it and take action as soon as possible, the gappers and that type of stuff, which we will be getting to once we've covered the rest of what we need to talk about before that. And that's going to be about all we have tonight. So if there are no other questions, I believe we're going to cut it off here, and I'm going to get some dinner. All right. We'll have the homework posted. Your homework is going to be to draw about 10 tries. Ideally, you should be going through and drawing as many as you can just to see it occurring and understand how that broad information is forming. So All right, guys. So I hope you guys have a good rest of your night. And with the homework, it's going to be about 10 charts. So get crack-a-lacking on that. And we'll talk more about combinations and all that fun stuff tomorrow. And I believe we're also going to be covering stops tomorrow, but I'll let you guys know tomorrow what we're covering. So that'll be it. I will see you guys tomorrow for the boot camp. And for those that are going to be in the stream in the morning, we will see what the CPI has got for us and disseminate those gaps. So adios and have a great rest of your night.